the trade headlines overnight have caused that kind of volatility, haven't they? They've caused some concern in Asia about the levels that we are ultimately going to see on the trade front. It was a reasonably sizable reaction, but not a big reaction. Are we getting immune to the trade headlines? Is that maybe what the takeaway from today should be? Yes, we're worried about it, but we're not as worried as we were on Liberation Day. We're not getting the kind of volatilities we did then.
No, not a panic anymore. And you're right. We're a little bit desensitized to it since we've heard so much and since we've seen so many times that escalation and then retraction or moderation that has pulled things back into a more reasonable range that the market might accept. And so, all of the price fluctuations that stung people on the way down and the way back up again, people are trying to look through that a little bit more. That said, so we heard from Trump in our morning, so right at the end of the US day, saying we're going to start sending letters out tomorrow, 10 or 12, telling people what their tariffs are going to look like. And that gives the market some cause for concern. Like, we don't know which countries are going to get it. We don't know what information we're going to get. We don't know how sizable they're going to be either. There's a long weekend coming up. Probably people want to take a little bit of risk off the table as a result of that. I think it's interesting, right? Probably the countries that are going to get these letters are ones that the US hasn't had time to talk to, so less significant ones. But nonetheless, it will be very interesting to see the details that we get within that to tell us what sort of approach overall the US is minded to take here.
Paul, he did float tariffs could range in the value from 60 to 70%. And on April 2nd, the countries that did have, numbers close to 50% were Southeast Asian economies. Is there any jitters in these Asian markets overnight?
I wouldn't say specifically people are more or less worried about that right now. But I think, it's partly because it could be smaller markets like Bangladesh or something like that kind of is a little bit under the radar of global investors, at least, that haven't had a chance to represent themselves to the Trump administration because of the fact that there's just so many of these deals to get through, right? So what we did have is Vietnam, at least, and so people can take a little bit of comfort from that, a little bit of a benchmarking from that. It wasn't as high as the US had initially started out talking about, even though it was higher than the tariffs had been previously. And so I think the markets took that with a relative degree of comfort and ease. There's scope for negative surprises. Maybe there's scope for a little bit of an upward surprise too.
Yeah, Paul, I think it's really interesting that a lot of our conversations about tariffs increasingly feature reflections on how uncertainty has a cost, and even tariffs that are high by historic standards might be better than constantly revisiting the subject. Let me move on to how the market has been responding to strength in the data out of the United States. What did you make of the way that the market just seemed to be quite impressed, really, by the jobs data?
Quite impressed by yeah. And in terms of the stock market and in terms of bond market, that's July right off the table. The Fed can take the summer holiday off, come back, in the autumn, basically. And I think that is surprising because we had thought that maybe if the data were bad, that would be kind of like pushing for a Fed cut and supportive. Nonetheless, the market liked the good economic news for now.